The Capital Catalyst, Navigating Investment Banking and AI-Driven M&A in 2026. In the sophisticated financial landscape of 2026, investment banking services in the United States have undergone a profound evolution, transitioning from traditional relationship-based brokerage into a high-tech, AI-augmented advisory ecosystem. For mid-market enterprises and Fortune 500 giants alike, the role of an investment bank is no longer just about capital raising. It is about providing deep-tier strategic intelligence in an era of rapid market shifts. As of early 2026, the primary driver of growth in the sector is agentic M&A, mergers and acquisitions, where autonomous AI agents analyze trillions of data points across global supply chains and regulatory filings to identify synergy gaps that human analysts might overlook. This has revolutionized the speed of due diligence, reducing the traditional 6-month closing window to as few as 45 days. High CPM keywords such as investment banking for tech startups 2026, equity capital markets, ECM, post-IPO strategy, and LBO, leveraged buyout, debt structuring, attract premium advertisements from Tier 1 bulge bracket banks like Goldman Sachs and Morgan Stanley, as well as enterprise fintech providers and high-end legal firms, making this the most lucrative niche for financial content creators. A significant structural shift in 2026 is the mainstream adoption of real-world asset (RWA) tokenization within the debt capital markets (DCM). Leading investment banks are now utilizing private blockchain networks to issue corporate bonds and commercial paper, allowing for T+O instant settlement and significantly lowering the cost of capital for issuers. However, to remain compliant with YouTube's financial and safety policies, it is mandatory to state that investment banking involvements, especially in private equity and venture capital, carry substantial risk. Creators must provide a clear disclaimer that they are not licensed financial advisors and that all investment decisions should be made in consultation with certified professionals. Promoting guaranteed returns, or insider deal flow, is a direct violation of SEC, Securities and Exchange Commission, and YouTube community standards, which can lead to immediate channel demonetization or legal scrutiny. In 2026, the industry is also heavily focused on ESG-compliant underwriting, where banks evaluate a company's carbon footprint and social governance as strictly as its balance sheet before committing to an IPO or debt issuance. The 2026 model for investment banking excellence also highlights the rise of boutique advisory firms that specialize in niche sectors like quantum computing and bio-digital engineering. These firms utilize generative financial modeling to create thousands of what-if scenarios for their clients, ensuring that capital structures are resilient to global geopolitical shocks. For creators, this niche offers immense depth, from explaining the mechanics of a SPAC 2.0 to cross-border tax optimization for global mergers. By providing evidence-based insights into direct listing innovations and the latest FINRA and SEC regulatory updates, we empower the business community to navigate the complexities of modern capital markets with confidence. Ultimately, the 2026 investment banking landscape in the United States represents the perfect marriage of human judgment and machine precision, ensuring that the flow of global capital is faster, smarter, and more transparent than ever before in financial history.